thanks for joining us today. I'm super excited you can be here. Today we're talking about, honestly, one of my favorite things to talk about ever. Because those of you that know me well know I like heavy equipment amongst many other things. And today we've got like one of the gurus in the space that finances these things from small to like monsters that I want to drive all the monsters. And he's like the guy in the space. And they do a ton of business. They do some really, really, really interesting transactions. And if you're looking for things along the equipment line from like beginning all the way up to very, very, very expensive things, then these are the guys that can help you. As a matter of fact, not only can they help you get the financing, they can help you even borrow against stuff. In some cases, I'm pretty sure, so we're going to find out, that you actually already own. So with us today is Jonathan Frank. He's actually a certified lease and finance professional, and he's also a commercial finance executive. He's got over 8 years of experience helping mid-market companies deploy capital for growth while really protecting the liquidity at the same time. So he's actually the vice president of sales at Alliance Finance Group, and he built and scaled a commercial finance team from like a single contributor to a multi-rep unit responsible for driving more than $100 million in originations across diverse industries. So he works really closely with CFOs, he works with operators, he works with business owners as well, and it basically structures deals anywhere from like $500,000 to $50 million. And if you're outside of that, don't worry. They've got other divisions in the company that can actually help you on both ends of that we'll talk about as well. And he basically comes up with financing solutions for critical capital expenditures for equipment as well as technology investments. So they're really known for bringing speed and certainty and structure to really complicated deals. And Jonathan is really actively involved in strategy. He helps in the underwriting alignment and really the execution to ensure solutions fit real world cash flow needs. He's also served on the board of directors for Elite OC, helping grow group members by over 60% grow in his tenure there. So Jonathan, what's up, man? Thanks for joining me today.
Yeah, thanks so much for having me on, Ty. Excited to walk through everything with you and share a little bit about AFG.
Yeah, I love that as well. And like I said, I love what you do because I love playing with big toys. And that's like, I mean, people know, like when I exit business, I'm going to go get like my certification and just like off or drive around backhoes and stuff. I don't think I'll ever be up to the crane level, but I just want to drive that stuff around. It looks like
yeah, there's some cool toys we've financed over the years. That's for sure.
Yeah. So what kind of stuff do you guys finance?
So I'd say, our bread and butter is the hard equipment side of things. We're have a lot of business within manufacturing, construction, packaging, and looking at the tech space, the technology sector specifically on the hard equipment side. So data centers, things of that nature. Medical is another big one. We do a lot of work with hospital systems and health systems on that side. But if you're looking at any sort of hard equipment spend on the CapEx side, it's something we pride ourselves in having the knowledge base to be able to assist on that. And at the end of the day, getting it done from a speed perspective faster than anybody else can at similar type pricing as where you'd be seeing from one of your banking partners.
So give me some examples of what you guys finance on the lower end of the equipment side. I mean, lower end is like less expensive. And then some of the stuff you guys finance on like the more complicated, expensive transactions you do.
Yeah, absolutely. So, I mean, there's a couple that come to mind, a couple deals that me and my team are working on right now. We have, around $500,000 for some dairy production equipment in terms of, the packaging of the materials of the end product, right? As well as the processing, of the actual, dairy output, right? In terms of the product, that came in at just right around, 500,000, a little bit on the smaller side for us on that side, and then, obviously a lot of the construction type equipment you're looking at is anywhere from that 200 to potentially $1 million range. Your dozers, your, potential directional drills, things like that are some examples on that side. And then, kind of on the larger ticket side of things, we've done a lot of business within tech recently and in terms of data center expansion for our customers and clientele base, as well as, some kind of out of the box type, really kind of projects where, for example, one where I'm currently working on it right now is, 8-figure, warehousing essentially build out on racking and, all the material going into an actual warehouse. So, That's another side of the things. Marine vessels is another one. Large manufacturing lines within plastics, right? Or any sort of food production or processing. That's another kind of example of stuff that can run into the high 7 or 8 figure range.
I like how you even said out of the box. You're like, we do dairy stuff and we do like cranes. I was like, wow, that's a big.
Yeah, it's a big, it's a wide array of things.
It's a wide array. Yeah. Like out of the box. I was like, what's out of the box outside of that? You went off the rails. I mean, technology was there too. So you guys just do like, you do just about, I mean, is there anything you don't do equipment wise?
Not really. Yeah. I mean, if we can get an understanding of, essentially the asset we're looking at, right? The equipment that's being purchased, as well as, obviously the corresponding credit of the business entity. And then, a big part of it is the reasoning for the purchase. Like, what is this going to do for the business, right? We pride ourselves on being, at the end of the day, kind of a story-based lender, right? Some financing deals that other lenders, won't entertain. If we get an understanding of why this is being purchased, what it's going to do for the business, hey, is there projections or, an ROI that you guys have mapped out on this as to what this is going to do for the business, we'll take a look at it. I mean, we've done, even, example that I use for when my reps are on deals and I hop on is, we've even done, like electrical and drywall build out for a large health system, for one of their surgery centers that they were opening, right? So as long as we get those understandings, and obviously it's a sliding scale of everything in conjunction with one another, but we will really look at anything on the equipment side of things.
Yeah, and for those watching and listening, it's important to know that keep in mind that Jonathan runs a division within the company, right? So if you're hearing things and saying, well, I'm not looking for something within that range, they've got things on both ends. It's just not the division he handles. They have things lower than what we're talking about, higher than things that we're talking about as well, just to keep that in perspective. So I love that you're so out of the box. I mean, like it's really, does a deal make sense? So when you guys, and I also love that you have underwriting experience because it's an easy conversation to have. When you're looking at and you're evaluating things and you're looking at it from a perspective, like you mentioned, like the credit side of the business. So like, how are you evaluating a business? Like you've touched upon some of those things. Does the deal transaction make sense to the business? But how are you evaluating whether somebody is an applicant that you can actually approve?
Yeah. So, that's a great question. So it's, anything, and I kind of split this up into 2 tranches, right? Where you have, what I call your commercial, essentially deal size and review process, and then your application only kind of review process, right? So anything under 500,000, hey, we're just getting a credit application, couple of months of bank statements, and then doing a direct scoring model internally as to, essentially, has there been, positive payment history in the past with other lenders, right? Is the corresponding score from a credit perspective in terms of, do they have applicable credit that would apply in this scenario, right? Is the equipment pretty solid on that side of things? And then, hey, from a bank statement perspective, do they have cash in the bank at the end of the day to be able to handle these monthly payments, right? On the commercial side, which is where I really love to kind of get my hands in, is a much larger scope and in terms of what we're looking at, right? So we'll gather a couple of years, full financial statements, right? So we're looking at audited, reviewed statements, potentially tax returns if the deal's maybe 2 million or less. We can operate off of some tax returns, but audited, reviewed financial statements. We're mapping out a full scope of, hey, what are the trend lines here? Has revenue been increasing? What's the size of the deal based on the revenue of the company? How does the balance sheet look, right? We're doing a quick ratio analysis. Hey, does the balance sheet have some strength here? Also, hey, is the business profitable? If not, is there one-time items that potentially affected that, right? Let's take a deeper dive into that. And then at the end of the day, kind of corresponding into either, any sort of capital deployment business, right? Hey, what does the cash flow look like? Is the company cash flowing? And once we look at those items, we could typically get a good understanding as to our risk profile from an interest rate perspective of what we'd be willing to do, potential term lengths as well, right? If we're seeing some stuff that might mitigate from a financial perspective, us going maybe 5 or 7 years, right? We might come with a solution of, hey, let's maybe peg this at a 3-year term, we're comfortable in that scenario, maybe based off debt service coverage ratio, things like that, right? To always figure out, and what I love about alliance funding, we're always trying to figure out a way to get the deal done. So we'll take all of that into account, kind of run our internal math. I'll always delve into that with my guys, and then hop on a call with the customer and walk through it and potentially get some answers from that conversation. Kind of going back to potential reasoning or forecasts or projections out, where maybe we could overcome some of those items that we're seeing in the credit that might not be up to par of what we're typically seeing, right? So those are kind of the big points. But it really allows us to truly kind of provide that consultative expertise when it comes to setting up our clients with financing on these large, very important, spend for a business. So.
Yeah, and I love the detail. I've never had anybody on the show that's provided that level of detail, and it's so insightful because people that watch us are trying to figure this out. Like, they don't want to apply and get denied. They're trying to figure out what it is that you're looking at. And I really think it's insightful that you talked about the credit, you talked about the financials, you talked about, does a deal make sense, how you're evaluating whether a deal makes sense, how it tallies into the revenue that they're generating, what they're borrowing compared to the revenue they're generating, the ratios. It's so insightful for people to understand this stuff we talk about all the time. Like, it's important. And if you manage it properly, we talk about funding readiness. Like, if you have to be funding ready, like if you manage the funding readiness, it goes a long way to make people like your jobs easier because they have the financials, they know their stuff, their numbers are there, they see it from a lender's perspective to get their numbers in line. And I imagine those are probably the better deals you like to have because the people just come to you and they're more prepared to get funding.
Absolutely. Yeah. When we've even had, some examples of, typically when I'm doing a review, I'll come up with a question list. And I mean, a CFO, without me even having to ask, will already provide, 90% of the questions I would have asked, right? Where they're ready. They understand the ask of what they're asking for. They understand their financial statements. And I always love to get it, especially as salespeople, right? We're trying to take notes as fast as we can. A lot of the time we're taking those notes, kind of putting it into our own words, getting that information directly from the source. And it's something I really, kind of hammer into my sales guys is, hey, they're obviously asking for this. They understand, what the process is going to entail here most of the time, right? Especially on the larger size deals. Let's get the question list out and let's get a direct answer from them in their own words. They know their business best, right? We're just coming in here from the capital deployment perspective. So getting those answers directly from the source, and CFOs love to do that most of the time too. So essentially getting an explanation as to why the deal makes sense is paramount in terms of getting things over the finish line. But yeah, it just makes the process smooth and easy for everybody, right? And on our side too, we're privately and independently owned, so we don't have to jump through a lot of the bureaucratic kind of boxes that a large banking institution would. So if we get comfortable, we'll set aside the exposure, issue an approval, and start funded vendors if it makes sense. So
when you talk about credit side of things, do you look at business credit? And if so, like how does that really tally into your ability to approve a business?
So yeah, I would say that really comes more into effect. And when I say, business credit, and maybe I could ask you for kind of what maybe your customer or listening base. Yeah, there you go.
Like commercial credit.
Exactly. So that's going to really come into play a lot on the application only side. So your $500, $1,000 deals and less, then that's extremely paramount. We're looking at, hey, what are the scores here? PayNet's another big one through Equifax where we're getting that score as well. And based on those scores, you're, essentially potentially getting an auto approval if those scores come back sufficient, right? And then the bank statements obviously are an ancillary, product to that just to make sure the cash is in the bank, right? But it's incredibly important. I mean, you could even get, creatively, structuring deals on our side where say it's maybe 2 or 3 pieces of equipment, right? That are, let's just use nice, easy round numbers, like 250,000 a pop, right? 3 pieces of equipment. Well, that's $750,000 ask, right? Well, we could actually, if it's 3 separate pieces and we need to, let's say, fund a vendor next week, well, we know on the commercial side that would technically qualify from a dollar amount perspective to go through that review. But, we're up against a timeline here from a speed perspective. So, hey, let's maybe separate the 3 of those out from, a schedule size, right? have 3 schedules of 250,000, go through app only. If we're confident that the business credit is there, we could have an approval same day and get you $750,000 in 24 hours, right? Yeah, so it's that's where experience in the industry comes into play a lot. Providing that consultative approach, having those conversations with the customer of saying, hey, is that a hard stop on a timeline? We have to have funds out. Okay, if that's the case, do you off by hand know what these scores would be? How's the business credit? Has there ever been potential payment issues in the past on debt? If not, all right, well, let's process this through. I mean, rates might be a little bit higher, but speed's the big thing, right? So there's 3 things in every transaction. I like to say there's, speed, price, and quality, right? It's really tough to get all 3 at the same time. So, picking 2 of those 3, if it makes sense, is definitely an avenue to approach to get deals done for customers where you really need to lean on one of those 3, right?
Yeah, I love that, and I appreciate the feedback. It's one of the things we talk about a lot. It's business credit and how well it ties in, and by showing a history of what you're doing, how that opens up higher and higher amounts that you're able to get approved with. When you talk about price, what kind of things affect the risk of a deal that affect the amount of money somebody needs down and the rates and terms they may pay?
So cash flow is a big one, right? Cash flow. If we're looking at, a larger deal and for example, potential strong balance sheet, right? But let's say the company isn't cash flowing where we'd like to see, or the debt service ratio is maybe just a 1x, right? All right, well, we might need to get creative in terms of potential solutions on that. So, can we provide a down payment? Like, is a down payment available, right? Or those type of questions where essentially there's equity built into that equipment where, for example, $1 million deal, right? So we get a 20% down payment. Well, essentially the risk for us now is 800K, right? Instead of $1 million. So, well, now that debt service coverage ratio is a little bit different from that scope, right? So that's a way to get comfortable with the deal. I would say in terms of interest rate, a lot of the time what's affecting it is obviously the credit basis of things, but collateral has a big scope into how that potentially pans out for a customer. So, for example, I mean, we finance a lot of software, ERP systems, within healthcare. Obviously, they have the EMR, EHR systems, right? Those are, I mean, you're essentially financing air at the end of the day, right? I mean, what comes in, the value of that is essentially the license. There's no actual hard equipment where in a default scenario, we could go recoup the asset, right? And try to make some of our money back. So, when you compare same exact credit where there, instead of buying, for example, let's just say like a crane, right? It's one of the strongest collateral pieces out that you could finance, and they're looking to do software. Well, that same credit, business is going to have 2 very different interest rates based on the collateral scope. So that's a couple of examples what would come into play. Another one is potentially structure, right? I mean, if there's from a securitization and risk perspective, if we're looking at, an operating lease based on potential, just a strict kind of your loan agreement, which in our industry is the equipment finance agreement, your EFA, right? Well, in a case of a default, legally, it's a lot easier for us to go recoup our asset from an operating lease perspective. So the risk profile is lower, and that's the scenario, right? Because at the end of the day, we own that equipment. Alliance funding and any sort of lease structure would own the equipment. With your equipment finance product, your quote unquote loan product, right? The end user owns that equipment from day one. So if it, God forbid scenario were to come up, that risk profile based on default recoupment and the ability on that end is a big factor in terms of potential interest rate as well. So
I think it's interesting that you guys that's how you figure it out. That's also ultimately how you determine, and higher risk, more money down, right? I mean, the high risk, like to your point, if you don't have something you could take back, then that's significantly higher risk. So then you're going to want obviously more money down because it's the risk is higher. So let me ask you this. I'm just out of curiosity. You guys are a direct lender, not a broker, or you are a direct lender, right?
Yeah. We are a direct lender. We also, just like any other large direct lender, right? Any other banking partner too would have potential syndication sources behind the scenes, right? So where I mean everything is still being done through AFG, but potentially selling off the debt behind the scenes, potentially based on having one syndicate partner who maybe likes a specific collateral class or asset class better than we do, right? We want to make sure we're passing that benefit on to the customer. So, but I would say, the majority of the business that we're doing is all done based off of AFG's own funds and our own, credit facilities. And then potentially behind the scenes, or we'll notify the customer and say, hey, we have, syndicate source here that could get you a better rate. It'll still be all run through AFG, but we're just going to go grab you cheaper funds, right? Essentially, and have that package behind the scenes for you. So it's the, kind of conjunction of those two. But yeah, from a strict broker perspective, it's not something we really handle. We have a lot of broker partners that come to us for money at the end of the day, that are looking to, of course, secure funds for their customers. So we're kind of the one stop shop where we have all of the available options for our customers.
Yeah, it's interesting, especially being privately owned like that. Like, I think about how much money you have to, how much cash you have to have. That's a lot of money, man. Like, if you think about like one deal you're talking about being like in the high 7s or 8 figures, like that's a lot of money to have on hand to even think about lending something like that. So is there a secondary market? Is that the way a lot of it's done in equipment financing? Like, is it sold on the secondary market, or is most of it kept? Like, are you usually keeping that stuff in house and financing it there and not getting like a partner or a syndicated partner, or having somebody buy it on the secondary market?
Yeah, it depends, right? So we have, I would say, there is a very large, essentially market, behind the scenes for buying and transferring kind of, portfolios of equipment finance or lease transactions, right? So you have, many institutions that are potentially looking to buy the stream of payments from another lender, what have you. And it's all based on, kind of macro market perspectives, that potential deal, right, from an asset perspective, the credit of that particular business, right? And that's all, ran through our portfolio team, which is absolutely incredible in terms of packaging those up. But the great part about our owners, Bridge Patel, Sean Donahue, and Larry Masani have built just an incredible machine and a business over the years where, we have the capabilities to. There's not many privately and independently owned, direct lending finance institutions that are able to write the check sizes that we're at, able to operate at the speed that we're at, and then be able to service the customer at the quality that we're able to, right? So, it's an incredible business. One of the best decisions I ever made was coming over from the banking side of things and working for AFG and deciding to take the jump over here to the private independent side. And it's just been fantastic.
Yeah, and congratulations on your success and the time you've been there. You haven't been there. I mean, it a long time, and like you're running the place, not the whole place. You know what I'm saying? Like,
Yeah,
congratulations.
yeah, we have an amazing team here. I wish I could take credit for all of it, but yeah, no, we've built an incredible machine, and I really pride myself on finding avenues and teaching the guys as to the way the business should be run, and especially on the sales side, strategies. Having them being able to run the math on the phone, being able to have the comfortability to have the, conversations from a credit perspective and pricing perspective for, a CFO that's running a $400 million business, right? So a lot of potential, newer guys in the industry, kind of balk at that a little bit, right? And it's like, oh no, well, let's just get you comfortable with the concepts, understand where we're coming from, understand where they're coming from, and we could have a cordial conversation in terms of where we need to meet, potentially find a decision in the middle, and being able to teach my guys that. So it's been I've taken a lot of time in the non-working hours, many late nights, which my wife hasn't been an incredible fan of over the years, but getting the CLFP. I also just completed the Wharton Online private equity course. That was an 8-week course that was fantastic in terms of understanding how that kind of part of the capital deployment sector is handled and how they're looking at things, because we work with a lot of businesses that are private equity backed. So being able to have those conversations with the private equity guys and it's just another value add we can bring to the table where, another institution or lender might not be able to really understand the full scope and have those conversations, or potentially pitch a product that might be a better fit for what they're trying to do strategically. So
yeah, I love that, man. I love the ambition and the drive, and it's obviously paid off. Leasing, buying. Like how does somebody come to you and know that, or when do you make the decision on where one makes sense versus the other?
Yeah, no, that's a great question. So, I mean, there's the old saying, cash is king, right? But at the end of the day, and this kind of goes back into an earlier point you were making of business credit, right? You'll see this a lot of the time on some of these deals from 500,000 and below, where most of these business entities have paid cash for a lot of the material. They're debt adverse, right? Which we completely understand the thought process behind that. But when it comes time to potentially expand or grow the business at the rate, or you see an opportunity that you want to capitalize on, either from the owner or finance executive perspective, having that business credit is obviously incredibly important, right? To be able to have a lender come in and be comfortable with that. So we'll hear a lot of the time of, well, why can't you guys get me approved at this rate? We've paid cash for everything. There's no debt on the books. Yeah, I completely understand. That's fantastic. But there's also then no history of debt here, right? So how do we get comfortable from a risk perspective in terms of understanding if we lend you out $1 million, what's going to happen in that scenario, right? So that kind of ties into the prior one. But the way I think about it, and I think a lot of CFOs and business owners that have built incredible businesses, 25 million, north of that on a revenue basis, they understand the value of leasing, because they can bring in large pieces of equipment that they know are going to have immediate impact from an ROI perspective, and be able to map out, hey, I can essentially bring in this $1 million piece of equipment for whatever the monthly payment is. Let's just say it's $20,000, right, a month. Well, I know that piece of equipment is actually, we're going to be generating revenue just from that single piece of equipment of $50,000 a month. Well, that's a $30,000 spread that I now have in essentially positive margin from this one piece of equipment. And I still have that $1 million to then spend on other avenues of the business, right? Potential increase of headcount or whatever have you, the other facets within the business that they can use to, strategically grow the business in other ways, right? Or build up a war chest at the end of the day, or whatever it is. So it's an incredibly valuable tool. At the end of the day, you really have to have the conversation with the owners and the CFO to have a discussion of, hey, what makes the most sense in this scenario? That's why getting those projections, getting an understanding as to the reason for the purchase is incredibly important. And I always tell my team, when you're prospecting out, right, and talking to individuals, and they're considering buying a piece of equipment, we'll have the conversation of, hey, let's just run a lease versus buy analysis for you, right? Just to see how it would play out. That way you have the data available to make a decision. Doesn't make this sense this time, that's no problem. But then we could have discussions in the future and build on that initial foundation to then have obviously data points where we can then discuss in the future as the business grows, what might make sense, right? Because you might only be buying a $200,000 piece of equipment now. You have the cash to do that. But what if in a couple of years the business grows to where you're expecting it to? Now you're looking at $1 million piece of equipment, right? You might not want to shell out that cash. So having those conversations, offering that capability to our customers initially, and really, having that consultative approach of, we're not trying to ever push any product on anybody. It's hey, what makes sense for the business? Let's show you some options, and then have a conversation from there.
Yeah. I love it. Jonathan, thanks for your time today, man. This has been really enlightening. If somebody's watching this right now or was watching or listening, and they're thinking about getting financing for the equipment, like, when should they know that they're in a situation where they should contact you to see if you can help?
Yeah, I mean, earlier the better is kind of the tried and true saying. So, I mean, if there's many businesses or finance executives or owners at a company will have an idea as to potential items that they might want to purchase over the next 90, 180 or calendar year, right? Or fiscal year, whatever it is. bringing that up to a lender early and saying, hey, this is what we're potentially looking at. This is what we're projecting the cost to be. Can we run some numbers and see where we're going to potentially be at from a structure standpoint, rate perspective, all that stuff. The earlier, the better. And one of the benefits too is everything we're providing is fixed rate financing. So, well, if the numbers make sense and you guys are ready to move on the equipment, well, getting that locked in, that rate immediately is a big benefit, right? So, and then potentially structuring stuff on the end of term side where we could give them, a refinance out option, or if rates do come down, or whatever it might be. But yeah, if there's any sort of talks internally or CapEx plans that have already been, worked through with the purchasing team or the operations team, my recommendation is always have, somebody that you could reach out to. Hopefully it's Alliance Funding after this conversation, to have those discussions early and just see what the numbers would be, right? It's always good to have that data.
Yeah. All right. Jonathan, thanks for coming on with us today. Where should everybody go to be able to reach out and find you?
Yeah, I mean, I'm very active on LinkedIn. You guys can go check me out there. You can reach out to me on that side of things. Check out the content that I post quite frequently. I always try to put some tidbits of things I'm seeing in the marketplace, either from a sales perspective, equipment finance perspective, leadership perspective. I try to share my thoughts there, or just go to afg.com. Even if it's not a fit for, again, the mid-ticket group, we have a lot of other divisions internally that could assist with whatever needs you're looking at.
Sounds good. Thanks very much for coming on with us today.
Yeah, thanks so much for having me, Ty. Thanks.
So listen, if you're watching this or listening to this and you're even thinking about needing equipment financing or leasing for your business, you really want to go to afg.com. You can also find Jonathan online just by typing in Jonathan Frank. And if you just type in Jonathan Frank AFG, you'll be able to find him easily on there. And I can tell you that they do what you just don't hear done in the industry. It's common sense underwriting. First of all, they operate fast. They're quick. And in equipment financing, you need that. If you have the right deal and you need something that's going to get you the ROI, you need somebody that acts quickly, and they do that. And the other thing is that it's all out of the box thinking. They're looking at deals, and it was interesting because when I asked, how do you evaluate? The answer was very long because there's so many different angles they're looking at to try to get a deal done. And that's just not something you hear from a normal lender. A normal lender, you fit in this small little box, you don't. And what Jonathan's basically saying is, look, we're looking at all these different ways the deal could make sense. And if the deal is going to make sense, we're probably going to consider doing it. So you just don't find too many lenders like that out there. And again, they can help you from the very beginning stages of getting into equipment all the way up to getting 7- and 8-figure pieces of equipment. So if you're in any kind of business, and again, he talked about a lot of different businesses, from software to dairy farming to everything else in between, right, to heavy equipment, then they've got products that can fit you because they're not product categories. They're literally looking at a deal and doesn't make sense. And if so, even if it's in an industry that's not typical for equipment financing, they're going to be able to help you. So what you want to do is this. You want to go to afg.com, or you just message them. That's how I found Jonathan. You just message him on LinkedIn. So go find him at Jonathan Frank. And again, you can just type in Jonathan Frank AFG and easily find him. You can also go to afg.com. And at afg.com, you'll be able to find all information about their products. You'll be able to learn more about them. You'll be able to go through and be able to reach out to them and get in touch with them as well to apply. So make sure you look him up online at Jonathan Frank on LinkedIn. And again, you also want to check out afg.com. If you're even thinking about anything to do with equipment financing, make sure you check them out. Thank you very much for tuning in. Take care. Have a great day.